If we really want to see change, it's going to be us, the populace, demanding the reforms that we want to see of our elected officials and really holding them accountable. And I don't think we've really reached that state yet. Again, I think eventually we probably will when things start breaking badly enough. But to a certain extent, we get the governance that we deserve. And right now, we are not holding their feet to the fire as much as we should. That's why you can see, like, a lot of people have issues with the amount of money that we're sending to support the war in Ukraine. Half a world away, is it really our business to be sending that much treasure there? Obviously, some people are going to say, well, look, that's the battle line of democracy, and we've got to hold Russia there. People can debate whether that's true or not. But an economic reality there is a huge employer in the U.S. economy is the military-industrial complex. Basically, the rationale inside Washington is, hey, to support all these American jobs, we got to be making munitions and stuff that we're sending to hotspots like Ukraine. So there's an economic interest in, one can argue, for America there. And we as a people have to say, well, all right, the pushback will be, what do you want? You want layoffs in the military-industrial complex industry? That's a lot of people we could be laying off. And we as a populace, I think, have to say, yeah, we'll be okay with that. We're willing to take that trade-off to keep the capital here in the U.S. and be spent in ways that are going to benefit us more directly. Similarly, immigration. We've talked a lot about how we have kind of a nonsensical immigration policy right now, at least particularly as it comes to illegal immigrants coming into the country. I feel that the country would be much better served by some sort of focused policy. It makes sense for us to bring in a certain number of immigrants. We want these type of skill sets, and then we'll reserve some percentage for amnesty. But we'll manage to that, right? And as I've heard recently said, you want high walls and open gates. So you want to be able to protect people getting in illegally, but you want to let as many people in as makes sense. We also have to be wide-eyed and say, look, the economic model that we have right now in America depends upon basically an ever-growing number of people in that core working class demographic of 25 to 54-year-olds. And that population is actually shrinking right now. There's several reasons for that, but long story short is just birth rates are down. And they're down because largely Americans don't feel like they can afford to have as many kids as they did in the past, right? If you want the existing model to continue, we either have to dramatically goose American birth rates, which is possible, but will take a long time, or we need to import immigrants to fill the hole. One other really important factor on this is that we have an underemployment crisis here in America. And it's funny saying that when the unemployment rate is still, 4.2%, whatever number it's currently at. It's been rising, but that's still a historically very low number. But you've got to take into account how they calculate it. So there's over 100 million U.S. adults that are considered not in the labor force, right? Now, some of these people are retired and they're too old to work. Some are college students. Some are disabled. But a large and fast-growing percentage are people that are literally just checking out. They're getting demoralized. They're just saying, you know what? I can probably get a check from the government through some program, or I can get family members to support me, and I'm just not looking. This is kind of the 30-year-old adult in the parents' basement. So my point is, we have a very underemployed amount of able-bodied citizens in this country who have basically checked out. And before we make the argument of, let's bring in a bunch of laborers illegally into this country because no American will do the work that they'll do. It's like, well, wait a minute. We've got millions of people here who are not contributing. The research shows these people are depressed, oftentimes, addicted to painkillers and other drugs. They're not living their best lives. Let's put it that way. They don't have a sense of purpose. They're not productive members of society. How can we address what's going wrong there and reactivate that labor productively in here before we start bringing in a bunch of labor that we haven't planned for, how we're going to support through social systems or a path to citizenship or whatever? So there's a lot of different factors that are going on here where, again, I think we're dropping the ball because of bad or misguided policies or lack of a real plan here. Yeah, like I said, I'm kind of a fan of the high walls but wide gates, as long as we have a really smart policy for how many people do we need to bring in? How can we reactivate the dormant talent we have here? What's the gap between where we want to grow the economy and how many additional workers we need? Let's get that number. Let's figure out what skills we want of that base. Great, let's recruit for them. And then yes, let's have some percentage for the amnesty hard luck cases that America has always been respected around the world for bringing in those people for. China had been a really big driver of the global economy, especially after the global financial crisis. It really helped pull us out of the global financial crisis. And coming into this year, people were hoping that the Chinese economy was going to start really growing again and that we'd get some help, we'd get another lead horse up here helping us pull the global economy. That's not materialized. China is really kind of in a world of hurt right now and is growing much less than the world expected. All economies around the globe right now are growing generally less than their historic averages. There's a general general concern about the strength of continued economic growth globally. So I think folks thinking, okay, well, the Fed has now stopped its hiking regime. It's now starting to ease again, and it started with a bang. That's going to be stimulative to the U.S. economy, which will be stimulative to the global economy. And there's a lot of other policies that get set around the world based upon what the U.S.'s federal funds rate is. So people who like the status quo are breathing a bit of a sigh of relief that, okay, good, Fed's now back to easing, and hopefully that's going to start boosting economic growth from here. Now, that being said, to the average person watching this, I would say a couple of things about the shift that the Fed has just made. And again, the Fed usually cuts or moves interest rates in what are called basis points. A basis point is just 1/100th of a point. So a percentage is 100 basis points. And usually the Fed moves in 25 basis point increments. It surprised a lot of people by cutting rates by 50% right here out of the gate. I mean, the market was actually the week prior finally started actually expecting the Fed might go 50. So it wasn't a shock to markets per se. But if you look at history, that's a pretty big rate cut. And the times where the Fed usually steps in with a rate cut of that size is when there's an unfolding crisis. First off, you got to understand that monetary policy, when the Fed pulls a lever, it acts with a lag. And that lag is pretty substantial. So if the Fed makes the cost of credit more or less expensive by changing the federal funds rate, the benefits of that or the impact of that usually takes quarters. I mean, usually like a year or more to make its way fully into the economy where you can see the impact of that change head. So it's not like the economy is going to start, leaping tomorrow because the Fed just cut 50 basis points. And on that point, the Fed hiked interest rates at a more aggressive pace than I think it's ever done pretty much in living history when it started its hiking regime. It then held them above 5% for basically, a year and a half or so, much longer than the market thought it would. That hiking of rates and then holding them at these high levels, that has its own lag effects. And now we're beginning to feel it, right? That's why the economy has been slowing. That's why the employment data has been getting worse. That's obviously why inflation's been coming down. So we are still feeling the lag effects from that, and we will continue to feel the lag effects of that for some time from here, likely 12 to 18 months still going forward from here. So we're likely to feel much more of the downward pull of the hikes that have already been done for the next year plus than we're going to see any impact from the cutting that the Fed is starting now. But if we look at things like what has changed since post-cut, the labor market's gotten an awful lot weaker. So we had a revision in the payrolls numbers where basically they came out and said, the numbers the government has been publishing through the Bureau of Labor Statistics, the BLS, we're realizing that those were overstated by over 800,000 jobs in 2023, which is a very substantial percentage of the payrolls that were being reported. Now, Todd, guys like you and I have been talking for pretty much the past 2 years about how increasingly unbelievable the BLS data was. But the authorities were saying, no, that's the jobs data that the Federal Reserve was basing policy on. All of a sudden, it's finally being admitted, you know what? We were using data that was pretty darn faulty. I also want to note too, if you look at some private data, so Challenger, Gray, and Christmas, they're a widely respected firm for tracking the labor market. They show that layoffs soared in August, hitting their highest total in 15 years, while year-to-date hiring hit the lowest in 19 years. So we've got soaring layoffs, and we've got shrinking hiring. So these are signs of not a strong labor market, even though that's what we've been told for basically the past 2 years straight, is that the labor market was kind of on fire and there were way more jobs than there were applicants. Now we're all of a sudden really beginning to see that that is highly likely not the case. And I think the data is finally catching up with the anecdotal data that you and I have talked about previously, where people who do get laid off or are looking to switch are finding it actually quite hard in a lot of industries to find a job now. Not all of them, some are still hiring, but for a lot of industries, especially like out in tech, where I live out California Bay Area, it's quite difficult these days to find a new job. The other thing I just want to note real quickly is the unemployment rate. One of the journalists at the Fed press conference actually asked Powell about this specifically, which I was like, this is great. This is a question I would have asked. The unemployment rate, if you look at it, following just about every recession we've had, the unemployment rate comes down, it then gets real quiet, and then all of a sudden, once it starts turning up, it spikes. Now, we shouldn't look at 2020 because that's what happened then, but 2020 was a pandemic. It wasn't sparked by economic issues. But pretty much every other recession you'll see coming out of it, the rate goes down, it gets real quiet. Once it starts turning up, bang, it shoots the moon. And it happened, great financial crisis, it happened in the dot-com bust, it happened in the early 90s, happened in the early to mid 80s. And so that's the pattern of how the unemployment rate tends to react. Well, you'll see here now, the unemployment rate has come down since the COVID crisis, bottomed out, and then now it's starting to rise back up here. Even looks like it's kind of gaining steam a bit. So you basically have to have an answer for why it's different this time. When they asked Powell about that directly, he actually didn't really have a good answer. He just sort of said, hey, we're going to be on top of this thing. But if the pattern of history shows that every time that the unemployment rate comes out of the bottom and starts raising, it really spikes from there. If you don't think that's going to happen this time, you better have a really compelling reason why, because you're basically fighting history on this. And then lastly, history shows that the Fed is generally always behind the curve. Listen to Powell, he kept saying, nope, we don't feel like we're behind anything here. But of course, that's what he's going to say. But if you look at interest rates, so you'll see in past interest rate hike regimes, the Fed would hike. They'd then plateau, and then they'd start cutting, and very quickly a recession would ensue. We saw that leading into COVID. We saw that leading into the great financial crisis. We saw that leading in the dot-com crisis, and so on in previous decades. And you'll see the Fed hangs out at this plateau and then starts to cut, and then it realizes, oh my gosh, you know what? We must have held rates too high for too long. The economy is heading into recession. And then the Fed is panic cutting, trying to stimulate the economy as the recession's starting to rage. And of course, all that Fed policy acts with a lag. So it's not for a couple quarters before the economy starts responding to the stimulus and starts growing again, and then finally, gets us out of recession. So again, this is the pattern. And here we are again. We hiked rates really aggressively in 2022. We've then plateaued them. We've just made the first rate cut. History shows here that the pattern is that we then go into recession pretty soon after, and then the Fed gets in a panic and starts panic cutting again. Will that happen this time? I think we have many mispriced asset markets right now. The financial markets, the housing market. One of the reasons that assets have gotten so detached from fundamentals is because of all of this intervention from our monetary authorities and our fiscal authorities. And you can argue whether the policy decisions at the time were the right ones or the wrong ones to make, but I don't think you can argue that the outcome of those policy decisions were to push up asset prices, rewarding those who already owned assets, which are in general, certainly with financial assets, 90% of all stocks are owned by the top 10% of households, right? Stocks aren't equally owned. When stocks go up, it disproportionately rewards the top 10%. Now, housing is more widely owned, but still, you got a third of the country that rents still. And when housing prices go up, that just punishes the renters, right? So basically, the policy outcome has been to reward those who own the assets to the detriment of those who don't, right? They get stuck with the rise of cost of living. And so we've just gotten so conditioned to this that as long as we've got a toe in some of these assets, we're not complaining too much. We're happy to see our home prices go up. We're happy to see our 401ks go up. If we've kind of just come to believe that this is just the way that it is, rather than what the truth is it's a deformation of the system. And you can only deform a system for so long before it has to try to get back to equilibrium. And I think that's what I'm worried about, is at some point here, there's going to be some corrective event or series of events that are going to bring things back more towards a market-based equilibrium. And there is going to be a lot of losses that have to be taken during that process. If the markets do correct, it could be really big. But even a 25-30% market correction is going to have a lot of shock waves, right? Same thing in housing, right? I mean, we can't have a housing market that is valued at the rate the current housing market is, because it is so unaffordable to a record percentage of aspiring home buyers at this time. And sadly, I think if the status quo continues for long enough, we're going to lose all those people, right? They're just going to have to become forced sellers at some point, right? And we've talked about how not only is it just the high price of housing, but it's everything that becomes a knockoff effect of that, right? It's the property taxes, it's the insurance, it's just the cost of maintenance, right? That's skyrocketed. So yeah, we either are becoming renter nation, right? Where we have an aristocracy that owns all the houses and the rest of us are just paying our tithes to them, or we get back to something that's more market-based. But to do that, it's going to require some real losses in this system here, which, sadly, I'm kind of in favor of that part, because I'm always on the side of economic sustainability and economic opportunity. And I don't think having an artificially deformed market that rewards the wealthy at the expense of the lower classes is in anybody's long-term best interest.